Home prices usually don't ever come back down, not because houses are special, but because every single year, the value of the US dollar goes down. And when the value of money goes down, assets priced in that money, like houses, go up. Think about it like this. If next year everything costs more, groceries, gas, rent, labor, it's probably not that everything suddenly became more valuable, it's that money buys less than it used to. During COVID, governments injected trillions of dollars into the economy. That money didn't disappear afterward, so prices reset higher than they were. Now here's the key part that most people miss. Even when inflation slows down, prices don't fall. They just rise more slowly. For prices to actually come back down, you need deflation. And broad deflation almost never happens unless there's a severe recession or depression. So if the government tells you that inflation expectations are less this year, and they're only expected to be 2% last year, down from 4% the year before, they're not saying that prices are going down. They're just saying that last year prices went up by 4%, and this year they're gonna go up by 2% still. So overall, price is not coming back down, it's just going up slowly. So when people say, well, if there's less inflation, why haven't home prices come back down yet? The answer is because the price level already changed and it moved up higher. Now, typically when you see assets crashing, like stocks or crypto, they move in a very similar fashion, but housing is unlike any of these things. Homeowners don't have to sell just because prices go down, because they actually live in the house. If someone bought a house for $600,000 and today it's worth $550,000, most people don't say, let me sell this right now and lock in that loss. They wait. Why? Because they usually live there and they can't just become homeless. So instead of prices crashing, what usually happens is homes sit longer, fewer sales happen, volume drops, and prices don't collapse like stocks or crypto. The market just slows down. Another big thing in the housing market is the 3% mortgage problem. A lot of homeowners locked in mortgage rates around 2 to 3%. And now imagine this. You have a 3% mortgage. You want to move. But if you sell your house, you're giving up that 3% rate and replacing it with a 7% rate. Even if you buy the same house, your monthly payment could jump by thousands of dollars. So what do people do? They don't move. And this keeps inventory extremely tight. And when supply is tight, prices don't fall easily, even if affordability is terrible. Now, you'll hear a lot of people say, why don't you just build more houses? It sounds simple, but in reality, housing is very slow. Between zoning laws, permits, labor shortages, material costs, year-long approval processes, supply can't respond quickly. So even if demand starts to come back down, prices don't instantly adjust downward. This is why housing behaves different than most other markets. Lower interest rates don't automatically mean lower prices. And here's another thing people get wrong. They say, I'll just wait for interest rates to drop. Because if interest rates drop, it becomes easier for me to afford a house. But when rates drop, two things happen at the same time. Yes, monthly payments get cheaper, but also a lot more buyers suddenly qualify, so demand jumps. And if supply is still limited, prices can actually go back up higher than they were before, even with lower rates. And that's why lower rates don't guarantee cheaper homes, and sometimes they actually do the opposite. So you might be thinking, so when do prices actually fall? Big price drops usually require something serious, like either mass job losses, forced selling, credit tightening, or overbuilding. And that's why 2008 was so different. People were extremely over-leveraged, loans were resetting, and sellers were forced to sell. And without forced sellers, prices tend to stall, not crash. So what's the real takeaway from this video? It's that home prices usually don't ever come back down because inflation resets the price levels. And homeowners can wait. Low-rate mortgages also lock people in, and supply is extremely slow to adjust. And whenever the government lowers rates, demand comes back in like crazy. So over time, you may see prices adjust, but they won't collapse. Now, that doesn't mean that there isn't good times and bad times to buy homes. It just means that if you're waiting for a massive reset, it's probably never going to happen the way you want it to.